This video covers the Income Tax Act 2025 as amended by the Finance Act 2026. This is an act to consolidate and amend the law relating to income tax, extending to the whole of India and coming into force on April 1, 2026. It includes definitions for key terms like accountant, additional commissioner, advance tax, and agricultural income. Agricultural income definitions continue, covering income from buildings associated with agricultural land and income from saplings or seedlings grown in a nursery. The definition of, quote, amalgamation for companies is also provided, detailing the requirements for the merger of properties, liabilities, and shareholder continuity. This slide defines terms such as, quote, annual value, appellate tribunal, approved gratuity fund, and approved superannuation fund. It also provides a detailed definition of assessee, which includes any person liable to pay tax or in respect of whom proceedings under the Act have been taken. Additionally, it defines assessing officer and block of assets. The definition of quote, block of assets continues, including tangible and intangible assets subject to depreciation. Key definitions like board, books or books of account, business, business trust, and capital asset are also provided, covering various types of property and investment vehicles. The definition of capital asset further excludes stock in trade, personal effects, and agricultural land situated in certain municipal or cantonment board areas. The table details the population criteria and distance limits, defining which agricultural land is excluded. It also excludes gold deposit bonds and defines, quote, foreign institutional investor and personal effects, excluding jewelry. The exclusions from, quote, personal effects include jewelry, precious stones, archaeological collections, drawings, paintings, sculptures, and any work of art. The slide also defines, quote, population and property, including rights in or relating to an Indian company. Definitions for securities, charitable purpose, chief commissioner, child commissioner, and commissioner appeals are provided. The term company includes any Indian company, foreign body corporate, and various institutions or associations deemed as companies. The definition of a, quote, company in which the public are substantially interested covers government-owned entities, Section 8 companies, and mutual benefit finance companies. The definition of a, quote, company in which the public are substantially interested continues, covering corporations and subsidiary companies meeting specific criteria. The slide defines, quote, convertible foreign exchange, cooperative bank, and, quote, cooperative society. It also introduces definitions for currency, demerged company, and demerger, outlining the transfer of assets and liabilities. The conditions for a, quote, demerger continue, including the transfer of property and liabilities, issuance of shares, and shareholder requirements. It defines, quote, undertaking, liabilities relatable to the undertaking, and provides the formula for computing the amount N of general or multi-purpose borrowings. Further points on demerger cover the splitting or reconstruction of various public sector entities and companies. The slide also defines deputy commissioner, deputy director, director, manager, and director general or director. Finally, it begins the definition of dividend, including distributions of accumulated profits and issuance of debentures or shares. Dividend also includes distributions during liquidation or reduction of capital to the extent of accumulated profits. It covers certain advances or loans by non-publicly interested companies to shareholders with substantial interest. The section also lists exclusions from the dividend definition, such as specific distributions or share issuance following a demerger. The definition of, quote, dividend continues, including provisions for advances or loans between group entities where one is a finance company or finance unit and the other is outside India. It details the inclusion of accumulated profits for different distribution types and defines concern and substantial interest. This slide further defines, quote, group entity and, quote, parent entity in relation to International Financial Services Centers regulations. It defines, quote, document as including an electronic record and, quote, domestic company covering Indian companies and others with prescribed arrangements. Other definitions include electoral trust, fair market value, firm, foreign company, and, quote, foreign currency. The definition of hearing includes communication through electronic mode. The lengthy definition of income begins here, encompassing profits and gains, dividends, and voluntary contributions to certain organizations. It also includes the value of perquisites, special allowances, and other benefits, whether in money or convertible into money. The definition of income continues to include capital gains and profits from specific businesses like insurance and banking, carried on by cooperative societies. It also includes winnings from various forms of gambling, employee contributions to funds, keyman insurance policy sums, and various amounts referred to in specific sections, including subsidies or grants, with certain exceptions. This slide continues the definition of income with various clauses. Key terms defined here include card game and other game of any sort, keyman insurance policy, and lottery. It also defines income computation and disclosure standards and income tax officer. The definition of India is provided, including its territory, territorial waters, and airspace. Indian company is defined as a company formed under the Companies Act 2013, including certain corporations and institutions. Indian currency and infrastructure capital company are also defined, the latter covering investments in infrastructure projects like housing, hotels, and hospitals. The definitions continue with infrastructure capital fund, detailing its function to raise money for investment. We also define inspector of income tax, insurer, and interest, which includes fees and charges for borrowed money. Interest on securities is defined, covering securities of the central or state government and other corporate debt. This scene defines International Financial Services Center and various tax authority roles, including Joint Commissioner Appeals, and Joint Director. It also covers legal representative and liable to tax. Finally, long-term capital asset is defined as a capital asset that is not a short-term capital asset. We cover definitions for long-term capital gain and manufacture, which involves transforming objects or bringing new articles into existence. Other important terms include maximum marginal rate, non-banking financial company, and, quote, non-resident. Key definitions on this slide include notification, partner, and partnership, which also includes limited liability partnerships. It defines permanent account number, PAN, and person, encompassing individuals, Hindu undivided families, companies, firms, and associations of persons. The definition of person is concluded, including local authorities and artificial juridical persons. Definitions for person of Indian origin and person who has a substantial interest in the company are provided. Various principal tax officers are defined, such as, quote, Principal Chief Commissioner and Principal Director General. We define principal officer, covering various roles like secretary, treasurer, or manager, and persons designated by the assessing officer. Definitions are provided for, quote, profession and public sector bank, which includes the State Bank of India and certain corresponding new banks. This slide defines public sector company, public servant, and, quote, or rates in force, detailing how these rates are applied for computing income tax, deducting tax, and calculating advance tax, based on the Finance Act of the relevant year. Definitions include recognized provident fund and recognized stock exchange. Regular assessment is also defined. The term relative is defined, covering spouses, siblings, and lineal ascendants or descendants. Finally, Reserve Bank of India and resident are defined. This scene defines, quote, resulting company in the context of a demerger. It also defines, quote, scheduled bank, Securities and Exchange Board of India, and, quote, senior citizen. The complex definition of short-term capital asset begins, generally meaning an asset held for not more than 24 months. The definition of short-term capital asset is further clarified. For listed securities and certain units or bonds, the holding period is reduced to 12 months. It also details specific periods included in determining the holding period, such as for amalgamated companies or demutualized stock exchanges. The criteria for determining the holding period of a, quote, short-term capital asset continue, covering units of a business trust, mutual fund schemes, and assets related to electronic gold receipts. It also specifies how the period is reckoned for assets like bonus financial assets and global depository receipts. The definitions for short-term capital asset conclude with definitions for equity-oriented fund, security, specified security, and sweat equity shares. The definitions of short-term capital gain and slump sale are also provided, the latter involving asset transfer for a lump sum consideration. This slide defines special economic zone, stamp duty value, and tax. It also defines tax recovery officer and total income. Finally, The extensive definition of, quote, transfer in relation to a capital asset begins, including sale, exchange, relinquishment, and extinguishment of rights. The definition of transfer continues, covering conversions of capital assets into stock in trade and compulsory acquisitions. It also defines unlisted share, value, and tax year. Next, Chapter 2 introduces the scope of total income and the concept of a specified entity, like a partnership firm or a limited liability partnership. The Act details when a change in the constitution of a specified entity is considered. It then addresses income deemed to accrue or arise in India, specifying that income referred to in subsections 2 through 8 is deemed to accrue or arise in India. This includes income from assets, property, business connections, or the transfer of a capital asset situated in India. Income from salaries is deemed to accrue in India if earned in India, including pay for services rendered and specific leave periods. Salary paid by the government to an Indian citizen for services outside India is also included. Dividends paid by an Indian company outside India are deemed to accrue in India. Interest payable by the government, a resident or a non-resident in specific circumstances, is also deemed to accrue in India. For interest income, any interest payable by the permanent establishment in India of a non-resident bank to its head office is deemed to accrue in India and is chargeable to tax. Income from royalty payable by the government, a resident or a non-resident under specific conditions, is also deemed to accrue or arise in India. Royalty is defined to include consideration for transferring rights to intellectual property, technical information, or services. The definition of royalty continues, covering the use of intellectual property, technical knowledge, or equipment. It includes the transfer of rights in computer software and specifies that the consideration is royalty, whether or not the payer has possession of the property, uses it directly, or the location is in India. Process includes transmission by various technologies, and, quote, computer software is also defined. Income from fees for technical services payable by the government, a resident, or a non-resident for services utilized in India is deemed to accrue in India. Fees for technical services include managerial, technical, or consultancy services, but exclude consideration for construction, assembly, mining projects, or income chargeable under salaries. Income arising outside India of a specified nature, paid by a resident to a non-resident or a person not ordinarily resident, is deemed to accrue in India. The definition of business connection in India includes any business where all or part of the operations are carried out in India, or where there is a significant economic presence. A business carried out in India includes activity through a person habitually exercising authority to conclude contracts or habitually playing the principal role in concluding contracts for the non-resident. It also covers a person who habitually maintains a stock of goods for regular delivery or habitually secures orders for the non-resident. Business activity through a broker or agent who works mainly or wholly for a principal non-resident or its controlled entities is also included, and such a person is not deemed to have independent status. Exclusions from business connection include activities through an independent broker acting in the ordinary course of business or activities confined to purchasing goods for export. Other exclusions from business activity include news collection for transmission out of India, diamond display in special zones, and filming cinematographic films by specific non-residents. A non-resident has a significant economic presence in India if transactions for goods, services, or property exceed a prescribed payment amount, or through systematic and continuous business solicitation or user interaction. The rules for significant economic presence apply irrespective of where the agreement is entered or the non-resident's place of business. Only income reasonably attributable to operations in India is deemed to accrue in India. Income from advertisement targeting Indian customers, data sales from Indian residents, and sales of goods or services using such data are included in business or significant economic presence income. A foreign share or interest is deemed situated in India if its value substantially derives from Indian assets. This applies if the value of Indian assets exceeds 10 crore rupees and represents at least 50% of all assets. The value of assets is the fair market value on the specified date. The specified date for asset valuation is the end of the preceding accounting period or the transfer date if asset book value has increased by 15%. Accounting period is generally 12 months ending March 31st, or a different regularly adopted period. If not all assets are in India, Only income reasonably attributable to Indian assets is deemed to accrue in India. Income from the transfer of shares or interests held by non-residents in Category 1 or Category 2 foreign portfolio investors is excluded. Also excluded is income where the transferor, individually or with associated enterprises, does not hold the right of management or control or a voting power exceeding 5% in the directly or indirectly asset-owning company. For interest, royalty, and fees for technical services, a non-resident's income is deemed to accrue in India regardless of whether they have a residence or place of business in India. Fund management activity by an eligible fund manager for an eligible investment fund does not constitute business connection in India for that fund, provided certain conditions are met as per Schedule 1.